I saved religiously for 20 years and built up $1 million. Now I'm retired and ready to enjoy my money. Wait, what? After taxes, I only get $700,000? When did I agree to go into business with the government? My name is Theo. I obsess over retirement planning like crazy. If you're struggling with your 401k or retirement accounts, hit that subscribe button, and if this video helps you out, smash that like button too. Here's the thing. Most people think a 401k is tax savings. That's completely wrong. Look, what I'm about to show you is going to be absolutely shocking. You know that warm, fuzzy feeling you get when you see your 401k statement? Those numbers keep growing, so it feels safe, right? Well, I'm about to drop a truth bomb that's going to mess with your head. That money, it's not actually yours. 40% of everything you've been saving for 30 years, that belongs to the government. What? You're thinking, but I put that money in there myself. Think about it like this. You buy a house and the bank finances 70% of it. Is that house fully yours? Nope. The bank is a co-owner. Your 401k works the exact same way. Every time you contribute, the government is calculating my cut that I'll take later in taxes. Here's what people really don't understand. A 401k isn't savings. It's a tax deferral contract. And the terms of that contract? The government can change them whenever they want. Okay, here's where it gets really interesting. Let's say you're contributing $500 a month to your 401k. Your company matches another $500. Sweet! That's $1,000 a month building up. But wait, who actually owns this money? You think it's obviously you, right? Wrong. The government is sitting there as a silent partner. Look at the actual statistics. The average tax rate on 401k withdrawals is 22 to 24%. But that's the current rate. If you've got 20, 30 years until retirement, you think tax rates will be the same? Here's what's really creepy. This silent partner takes zero risk. Stock market crashes, company goes bankrupt, economy tanks, the government still gets their cut every time you withdraw. You absorb all the losses, but you split all the gains. Is that a fair partnership? Seriously, when you signed up for your 401k, did anyone explain this? Did they say, oh, by the way, we'll decide what tax rate you pay when you retire? Nobody said that, did they? That's exactly the problem. You think you're paying taxes later instead of now. But what you're actually doing is giving the government control over your tax rate. Look at today's situation. Someone in the 22% tax bracket in 2024 contributes to their 401k and saves on taxes. But what if tax rates are 30% when they retire? They pay 8% more. Do the math. On a $100,000 withdrawal, that's an extra $8,000. The scariest part? Required minimum distributions. At 72, you have to start withdrawing whether you want to or not. And the tax rate then? Whatever the government decides. You can't say, I want to pay less taxes this year. You already signed the contract. All right, let me show you some really scary math. A 35-year-old contributes $1,000 a month to their 401k for 30 years. At 7% returns, they'll have about $122 million at 65. Wow, millionaire status, but wait. After taxes? At a 25% rate, that's $10,000. At 35%, $793,000. That's $430,000 just gone. The RMDs make it even worse. Starting at 72, you're forced to withdraw about $45,000 in the first year alone. This gets added to your other income, pushing you into higher tax brackets. Social Security becomes taxable. Medicare premiums go up. You know what's insane? When you run the numbers, the government might actually collect more in taxes than you originally contributed. Is that saving or is that a piggy bank for Uncle Sam? Now you're thinking, but the company match is free money. You're right, the match is great. But why not just take the match and put everything else somewhere with more control? People fall for the 401k trap because of psychology. It's called present bias. Getting that immediate tax break feels so good that you don't think about the future consequences. You contribute $1,000 and save $220 in taxes right now. Feels awesome. But when that $1,000 grows to $3,000 over 30 years and you withdraw it, you might pay $750 in taxes. You save $220 today to pay $750 more later. This is why it's not tax deferral. It's a tax amplifier. The bigger the account grows, the higher tax rates go, the more you get hammered. From the government's perspective, it's a perfect trap. Look, The U.S. government debt is what, 33 trillion? They're paying over $1 trillion a year just in interest. Where do you think they're going to get more money? Think like a politician. Where's the easiest target? Retirement accounts like 401ks and IRAs. Why? First, there's a ton of money there. 7 trillion in total 401k assets. Second, you can't run away with it. Withdraw before 59, penalties. Third, you already agreed to pay taxes on it. It's legally justified. History shows us that when governments need money, they raise tax rates. In the 1970s, the top rate was 70%. You're thinking, they wouldn't go that high again, would they? But with baby boomers retiring en masse and Social Security costs exploding, who's going to pay for it? People with money trapped in 401ks. You're a sitting duck. So what do? Give up? Hell no. Smart people are already finding alternatives. First option, Roth accounts. Pay taxes up front, withdraw tax-free later. What's better? Paying 22% now and 0% later, or 0% now and 35% later. Second option, regular taxable accounts. No tax benefits, but complete freedom. You can access your money anytime, and long-term capital gains rates are usually lower. Third option, tax diversification. A little in 401k, a little in Roth, a little in taxable accounts. When you retire, you can choose which account to pull from based on the tax situation. The key is having options. Whether the government raises or lowers tax rates, you want to be able to respond. If all you have is a 401k, you're completely at their mercy. Here's the final question. What's the real definition of wealth? Numbers on a statement? No. Assets you actually control. Having 1 million in a 401k doesn't make you a millionaire. It makes you a co-owner of an asset with the government. And the government determines what percentage you actually get to keep. Truly wealthy people never rely only on 401ks. Why? Because they have no control. When you can withdraw how much you pay in taxes, everything is determined by government rules. So now you have to choose. Do you keep building up this tax bomb, or do you start building real wealth that you actually own? If this video opened your eyes, subscribe and hit that like button. Drop a comment and tell me what your retirement strategy is. Next video, I'm diving deep into Roth conversion strategies. Your future is your responsibility. Don't let the government control it.